In this video, I want to introduce an amazing indicator that has made $2 million for the creator of the indicator and the strategy. This indicator was created by Nicolas Darvas in the late 1950s, and by the help of the trading strategy that he made based on this indicator, he could turn $10,000 into $2 million in 18 months. Soon he became very famous because of his great success, and later in 1960 he wrote a book, How I Made $2 Million in Stock Market, in which he completely explained his method about Darvas Box and the trading system that he developed based on this indicator. Darvas Box trading strategy is actually a trend following strategy, which shows when the momentum is strong so we can ride on the trend and make profit. Alright, let me explain how we trade based on Darvas Box method. Just like any other trend following strategy, we don't want to try to predict the market, but we try to show reaction to what is happening in the market. Drawing Darvas Box is very simple, and there are just some rules that you must follow. The first rule is that the price must break above 52-week high. Right now we are on NVDA chart and the time frame is daily, and consider, for example, this line is 52-week high, which is the highest price that we have seen in the last 52 weeks. As I said, the first rule is that the price must close above the 52-week high. In other words, we get a candle that is closed above 52-week high. When this happened and we get a candle that is closed above this level, after that there should be 3 consecutive days that do not go higher than this high. When this happens and we have 3 candles that didn't exceed this high becomes top of the Darvas box. So we can draw a, for example, box here, which top of the box is at this level. So now we have a box that this high is top of the box. And for the low of the box, the low of the breaking candle should be set as the bottom of the box, unless in the next 3 candles we have a lower low, which is our case here. So we set the bottom of the Darvas box at this level, at the low of this candle. When the box is broken and new highs are created, again when we have a new high and after that we have 3 candles that couldn't pass the high, we adjust the Darvas box and we have a new top for the box. For example, here after reaching this high, the next 3 candles couldn't exceed this level, so now this high would be top of the box. And similarly, in a bearish scenario, when the bottom of the box is broken and we have new low, when we get 3 consecutive candles not being able to go lower, so this low becomes the low of the box. So the box is continuously adjusted based on the rules that I explained. In times that Nicolas Darvas created this trading strategy, computers had not been invented yet, so he did everything by hand on papers, just the way that we did here, but on papers. These days we have access to real-time charting platforms like here on TradingView, and we can have any types of mathematical functions on our chart just simply by a few clicks. And for Darvas box also there is an indicator created on TradingView. So here we click on indicators and we search Darvas box. We add this one, which is written by Kivonk Ozbilgik. You can also add this one, Darvas box buy sell, which is written by someone named Seyhun, and it's exactly the same with this one, but it also shows buy sell labels. We continue with this one because I want to explain how you trade based on them so you don't get distracted by the labels. As you can see, we have 2 lines here. One is green, which is actually top of the box, and one is red and it is bottom of the box. As you can see, it is continuously adjusted based on the rules that I explained. Alright, now let me show you how you can trade based on this indicator. Nicolas Darvas traded in stock market, so I choose a stock, NVDA, so I can explain in the same context, but no limitation on this, and the same method can be applied to other assets or markets. And he traded on daily time frame. We are also on daily time frame now, but again you can apply the same concept to other time frames because the whole philosophy with this trading system is knowing when the momentum is gaining strength and then riding on the trend and make profit. Alright, if you remember, we draw a box here earlier at the beginning of the video with the top of the box at this high and bottom of the box at this low, and you can see that the indicator has automatically drawn it for us, and the lines are also automatically adjusted based on the rules that I explained. When the price breaks above the top of the box, it's a buy signal. In his book, Nicolas Darvas explains that the trade entry should be when the price is 1% or 2% above the box, but I suggest it's better to wait until the candle is closed above the box. By doing so, you lower your risk of being caught in false breakout or just fading by the shadows and then having the candle just back in the box. So when the candle is closed, we can enter a long position here when the new candle is opened. Placing a stop loss and managing your risk is very important in this trading strategy, and he recommends placing your initial stop loss pretty tight, just below top of the box that was just broken. So the stop loss should be placed below this line, this broken level, or also below the low of the breaking candle is also a good place for setting your stop loss. And then he recommends moving your stop loss and lock in your profit and add to your position as the price is moving in your favor. He explains when the top of the box is adjusted and a new box is created, like here as you can see. He recommends when the price breaks this box, you should add to your position and move your stop loss below the low of the most recent box. He also suggested that if the price goes back to the old box, for example here, when this box was broken and the price advanced and we got a new box here, if the price enters into the old box, I mean the price declines to around here, entering to the old box, he recommends that you should instantly close your position. So every time that the box is broken, we can enter a long position or adding to our existing position and moving our stop loss below the most recent box. And as I said, whenever the price enters into the old box, we should close our position, and again we wait for the next opportunity to enter in a trade. The same method that I explained here for opening these long positions, similarly it can be used for opening short positions, but everything in the opposite direction. Nicolas Darvas highly recommends that you should only take trades that are in the same direction with the overall trend of the market, and also not trading when the market is in a trading range. He only traded when the stock was trending and only took positions in the same direction with the trend. He actually used a mix of fundamental analysis and technical analysis in his trading strategy. He recommended not buying stocks when the major indices are in bear market or when the volume is flat or declining. He also checked whether the stock was in a strong sector with increasing volume and rising earnings. By checking all the fundamental factors and also using technical analysis, he picked the stocks that were trending, and then by the help of this Darvas Box method, he identified precise entry or exit points. So you must pay attention that this trading strategy is a combination of technical analysis and fundamental analysis, and he only took positions in stocks that were technically and fundamentally strong. The next important point is risk management that he also mentioned that many times in his book. No trading strategy can give you 100% guaranteed signals, and losing positions are always part of the game, no matter how much accurate is the strategy or how much experience you have. So you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new video. See you guys in next video, and good luck with your trading.